ready?
Yeah, let's do this. Hello. This is Bree Milani with Sky Insurance Brokers, and welcome to the Greatness Podcast. I'm super excited today to have one of probably my longest clients. I wouldn't even consider you a client anymore, probably more like a friend. I think we've worked together for about 7, maybe 8 years.
Lord.
Maybe longer. And she's, I would say, a veteran in this industry and very well respected. So I wanted to have her on here. Her name is
Tracy Ferris.
Yes.
And I am with Geneva Financial.
Yes, we're very excited to have you on today.
Thank you.
I know this is kind of a fun little thing that we get to do, but I do want to genuinely get into, what got you in this business. I know you have an interesting story about that. So why don't you tell us a little bit about why you got in this industry?
Absolutely. First of all, thank you so much.
Of course.
With COVID and everything, it's kind of been, this isn't normal. So it's nice to be normal again.
Yes,
so I appreciate
human interaction.
Yes. Lovely. So a little bit about my story is I became a loan officer in 2007.
What a great time.
So the market was crashing.
Yep.
And I think it actually officially busted in 2008. But I was a probation officer, and I worked with, prior to that, I worked with group homes and so children, at-risk youths, and that was just always my love, is just helping people. So the reason why I got in this industry was because, unfortunately, there was a gentleman that was a loan officer that did a loan for my mother and did a loan for my brother, and didn't educate them enough. My mother, we lost my father. My mother never, handled the financial part of it. And so she trusted this gentleman, and he was referred to her. So she trusted him even more. And the same with my brother. But with my mother, when she went to sit down to sign the paperwork, she realized that she was in an interest-only loan when she really wanted to only do a 30. He talked her into pulling out an extra 30 grand just in case. Oh. She had a prepayment penalty, which was very common back then, but when you have over 800 credit scores, shouldn't be. So what happens is which I learned, a loan officer gets paid for all of those different things.
No surprise.
No. Yeah. And then for my brother, he moved up from San Diego, trusted this lender again, and it was a great loan. It was 80-20. So there were 100% financing loans. But if you don't educate the new buyer, the green clients of what really happens, he was not aware that there was that second that he had to pay on it. Gosh. And then of course it wasn't, it was an arm, so it adjusted. And so just like everybody else, it adjusted and he couldn't make the payments. So it was just uneducation, he was uneducated.
Right.
And the loan officer didn't educate him enough.
Yeah.
And so I decided I was looking for a job because I moved out of California and came back, and I was looking for a job. And so I just decided through my girlfriend that, let me just see what you're doing. And so she taught me everything that I know today, and I give her much props for that.
I think I know who it is.
And became a loan officer to help people, to educate, to guide, to support. And it wasn't to make a quick buck. And especially with the first 3 years.
I was going to say, I don't think in 2007 you came into this industry to make money.
I don't. I remember my husband at the time, he was just like, you need to either make money or stay at home. And I was like, well, I'm not staying at home. I got a degree. I'm not taking care of the kids. I love them, but I'm not taking care of them. So I hired a business coach, and he helped me run my business as a business because I had no background as far as entrepreneurship.
Yeah.
My mother was a teacher, and my dad worked at a repo company.
Well, and it's definitely a scary, and we kind of skipped over, your whole introduction. Obviously, I know you have 2 kids.
Yes.
And this job does allow that, you to have that flexibility and be with your kids and do all of that. And so it'd be hard to kind of, get used to that, to, you know, that flexibility. Sometimes some people can be kind of detrimental because you're like, oh, I'm my own boss. I don't need to go to work today. So that's awesome. It's such a good story. You don't hear those types of stories very often. I mean, I work with a lot of loan officers, and yeah, they get into the business because they're like, I don't know, it just sounded cool, so I did it.
And you can make a lot of money.
Yeah.
And
let's be honest.
And and you can make a lot of money, but if that's the reason why you're getting into this, I mean, loans are a big financial piece to everybody, you know, to
probably
your
the
life.
biggest
And it's
purchase
huge.
of most people's life.
And everybody wants to become a homeowner. And so if you just go in that mindset that, oh, it's just a quick buck, then one, you'll never have that repeat business.
Yeah. I know you do. You have almost all your clients are repeat. It seems like
referrals. Or repeats, which is really exciting. I don't pay for leads. I don't knock anybody that does. I just have never chose to do that.
Yeah. And I know you kind of pride yourself on that, and I think that kind of sets you apart from a lot of people in our industry. Like you said, not that it's a bad thing, but when you go into it just really wanting to genuinely help people, you're not focused on, I need to help 50 families in 1 month. It's just, no, like what comes.
I don't want to help 50 families in 1 month. I mean, there's people that do that. I do have children. I do want to sleep at night. I mean, last night I was on the phone until 7:30 at night, and I'm just like, okay, I gotta go.
Yeah,
like, I can't not have time to myself.
Yeah, and let's talk about your kids, because your son is like a huge athlete and he plays baseball, and from what I can see, he's like a total stud, killing it. So let's talk about your kids. Your son is how old now?
He's 14.
Yep, so freshman.
He is a freshman. He is currently injured and cannot play right now.
I saw that.
But hopefully he's working with one of the better physical therapists with Kaiser.
Poor guy. So he ended up injuring his groin, right?
It was his hip. He fractured it.
Oh my gosh.
From being too tight and the muscle pulled, and so he actually injured it doing soccer.
Oh my god! And then re-injured it playing baseball.
Yeah.
Oh my gosh.
And then he was on 2 months of no play time. Thought he was good. Smacked the heck out of the ball.
I saw that play.
It was awesome.
I was like, yeah, no.
I told him if it would have gone over and not hit the warning tracks, he wouldn't have had to run so fast.
And he just ran and just pulled that. Oh, poor thing.
Yeah.
So they said 2 months, I think.
Yeah. Again.
And what about your daughter? Because she had a pretty significant injury.
She had a huge injury. Yeah.
Not to get negative, but yeah, you've had some pretty crazy injuries with your kids the last few months.
It's been 2020.
Yeah, true.
And going into
2021.
Yeah. Yeah, my daughter's good though, and she still has hand, physical therapy for her hand, but she's doing a lot better, and she's able to do soccer again. So
yay.
That's exciting.
Yeah, I know we completely skipped over the fun part of this podcast, which is like getting to know you. But I was so eager to tell your story because I think, when you told me that how many ever years ago, I was like, oh, that's different than what I normally hear. Yeah. I usually hear like, oh, just got into it because it sounded cool. No. You had like a genuine reason.
It's a lot of work. It's a lot, and I have a lot of friends that are wanting to get into doing loans, and then I hear a lot of real estate agents that want to do loans too. And it's a lot.
Well, and after the 2020 crash happened, things changed so much. I was
2020 crash.
2020. Hello.
I'm
2010.
like, we didn't have a crash.
2010 crash. Well, I don't know. What would you say? I was in high school when it happened, so I think it was around 2008 to 10.
Yeah, and I actually looked at one of the appraisers that's on Facebook, and Ryan Lindquist.
Oh yes.
And he just put out statistics, and 2008 was like the bubble bursting, basically.
Wow. So from there, it kind of just trickled. But after the bubble burst and things slowed down, when things started to pick back up again, they've changed guidelines and they've changed ways. Because I think the huge talk right now, we can get into like our market, and it's just so crazy. I mean, we're hearing, I saw your posts, like the 122 offers on a house. But, an average home, I see people say they have 30 offers on it with 100 and something showing. So is like, there's chatter. People are like, is the bubble going to burst? But from 2010 to now 2020, lending guidelines have changed so much. So do you foresee that happening?
That's why I feel that we won't, but I
hope not.
The loans that people have gotten into and the amount of equity that people have right now, even if they've lost jobs, they can sell their house, or right now, I don't know if it's still being forgiven or not, but I think it has been extended. But the programs are different. They had to qualify. I mean, when I first got in this business, it was just like, okay, what do you want to make?
Yeah. How much do you
how much do you, and that's also the difference, I think, it was before people were calling and saying, when I would talk to clients, how much can I qualify for? And now I'm like, how much do you want? Like, what do you want your monthly payment to be? Because that's where you have to start. You could qualify for a $550,000 house, but do you want that payment?
Right.
Can you even afford that payment?
Because then they see that payment and they're like, it's how much a month?
Yeah.
I mean, it's crazy. Yeah. And you're going to overextend yourself.
Yeah.
And I hope most people have explained that to where people are understanding, like, just because you can afford it doesn't mean you should buy it. Because that's something my husband and I talk about a lot, is like, sure, we could go buy a new house, but our mortgage payment would be double what we pay now. And why would we do that if you're comfortable in what you're doing? And that's my hope with, this in 2020 now. Things have changed, and it's not like, oh, I make $150,000, so give me a loan. No, you have to actually prove it. There's reasoning behind it.
Yeah, which is really nice right now is, I mean, I've always been a loan officer that has focused on purchases, but that's also because of the time that I got in this market.
Right.
We would have, just at the branch that I worked at, people calling in and asking to refinance. And all I was doing was explaining notes to people. And notes tell you exactly what, a lot of them were in adjustable mortgages. So I would tell them, okay, this is what you need to anticipate. However, the market has changed so much, you cannot refinance.
It didn't make sense.
Right? So that is the reason why I was in purchase business only. And I mean, all the way up until last year, just because 2020 was so different. I had some purchase, but I was mainly refinance business.
Right.
But now it's been switched again, which is nice because I love the refinances are, they're my past clients.
Right. So you've worked with them.
They're pretty, I mean, it's pretty easy to save them money and make sense, but it has to make sense to refinance. So a lot of people changed their terms because the money was so cheap.
That's what I've
heard. Rates were so cheap.
Yeah.
Going from, you're in a 30 with a slightly higher rate, but then you jump to a 15 or a 20 if you can afford that. Keep making the same, your payments either the same or if you drop mortgage insurance, but just strategizing that way. But I've had more applications recently on purchases again.
Oh, good.
Which is
so
really
are you seeing
nice.
People's offers getting accepted? Because I know that's the hot topic.
That's very hard. It's tough. It's really tough. But I think that if you have a good, if you are a client and you are out there shopping, and if you have a good real estate agent and a good or loan officer that are, teamed up working together, you can get your offers accepted. But you have to know, I just had one that we closed in 20 days.
That's crazy.
And it was FHA.
Wow.
And, it was the combination of the real estate agent, talking to the listing agent. It was the combination of me saying, okay, this is what we can do. We can shorten contingency times. We can make the offer, this is how you can make your offer
more competitive.
So, you just have to, but you have to have, and you can't go in and lowball.
Right. I mean, if anybody's
right
doing
now.
that, or your real estate agent is telling you to do that, then they probably aren't a full-time real
and it's
estate
not,
agent.
I will give the real estate agent probably a lot of credit. It's not them saying, okay.
Right. It's the client.
It's the client that thinks that the house is not worth it. And so they want to go in a little bit lower. But yeah, it's very competitive out there.
Which is understanding, because if you're just now brand new into this market, or let's say you bought 5 years ago and you're looking to move up or, downsize, you might think, wow, these prices are so way, way overinflated. But it's like, that's kind of just our reality now.
Well, and I have
especially
clients
in
that are,
County.
yeah, and I have, a lot of people feel that, we were talking about this earlier, like VA, FHA loans are harder. But I've had I have another VA contract right now that's written slightly over what the list price was. And I have 2 VA loans that just closed at the beginning of this month. Both of them were $30,000 higher than what the list price was, but they were prepared to pay that difference if the appraisal came in lower. And you can do that on VA, which is a myth. Some people don't think that you can.
I mean, is it fair to say you specialize in VA loans? Or what's the word? You do a lot of VA loans.
I do a lot of VA and FHA, yes.
Yeah.
I think I specialize in more first-time home buyers, or even just ones that are just selling their house and moving up. That's kind of my main, as a big general, if you look at my list of my clients. And the reason being is because I like, if I get a client say a real estate agent sends me a referral and I get a client, they're like, they need their hand held. Totally not a problem. So I'll collect all their documentation, everything up front, collect all their documentation, look at it and see if there's any place that needs some improving. If it's credit, then I take the extra step. I'm not a credit repair company,
Right.
but I can give you suggestions based off of, I can give them suggestions, and that's what I do. I can, if it's income, obviously you only have so much to work with income,
Right.
But if you're not working 40 hours, see if you can start working 40 hours and get that, consistent. If it's saving up for money, you think that you can afford a $2,300 payment, but you're only paying $17 right now a month for rent. Okay. Put away the difference.
Yeah.
Every single time you make your
Yeah.
rent payment. Don't live off of it. Just put it away. Then you start saving.
And I know with like the VA buyer, we talked about this before. There's a stigma, and I don't know what the stigma is, but you've said that before. There's like a stigma against it, and it's people just don't like to accept the offers. And what are the things that you want people to know that's like it's a myth. It's not true. Like, there are a few things.
One that the seller has to pay for everything.
Okay.
The seller does not. It used to be that way. There was a lot of fees that the seller had to pay for. That is not true anymore. Also, there's, as far as like your appraisal, some feel that VA appraisers will bring it in a little more conservatively, or they don't, or they take too long. Well, right now it is a law by like the VA appraiser. Once it gets assigned, they have 7 days to get that appraisal back.
Okay.
Period.
That's it. Okay.
And my conventional ones are taking longer than that.
I've heard that from multiple people. Are taking
that's
forever.
A huge plus. And then any type of, this goes with VA and FHA as well, but any type of health and safety issues, if there's any health and safety issues on a house, it's going to get called out by the appraiser on any type of loan.
Right.
Even a conventional loan.
Right.
I mean, you have to have windows in your house, so I mean, so I think that is a little bit of a myth, that they think that it's a little bit more complicated to get the appraisal to pass, and you do have to have a pest inspection on a VA.
Which, I mean, if I was buying a house, I'd probably want that too.
You're going to make sure. Yes. And the only thing is that they, if there's any pest infestation, like Section 1 items, you have to get those repaired before you close. But it's not necessarily the seller's responsibility.
So the buyer
there's a loop for that. Yeah.
And I think I remember, a few years ago, that was the big, the hot button was like, well, the sellers don't want to pay for it and they have to on certain items. So,
and to me, the files that I get, and I'll call them like the files, the scenarios of the clients, VA strong.
Yeah. I know you've said that before.
And they have great income. I'm not saying that, they do and nobody else does, but they have discipline.
Yeah. Clearly. They've been in the military.
So they have a little bit of discipline.
Discipline, yeah. And they understand, like they can, if you tell them, hey, you got to save this much more, they have that discipline to be able to do that. Yeah. Whereas some other people are like, meh, oh well, it is what it is.
And a tip on the VA to get the offer accepted is sometimes, so they don't have to put down an earnest money deposit when they purchase a house, but you can, and you should. And say you put down 3% of an earnest money deposit, that shows the seller that you have money in the game, because you don't. I mean, I have a client right now that, it's $795,000, and he doesn't have to put down a dime.
Wow, that's amazing.
A large mortgage
payment. That's kind of why I said wow. I was like, wow. I mean, it's amazing. You don't have to put anything down.
You can do $1 million or not. Yeah, but that's a huge mortgage payment.
But hey, to each their own. At least, having cash in your bank is better than, having to put it down, I suppose, if you can afford that payment.
I wouldn't want that.
Yeah, no, thank you. Hopefully you're not listening. No. Well, so, obviously rates are a huge topic right now. People are freaking out. Are they going to keep going up, even though they're historically really low? I know you don't have a magic 8 ball, but in your opinion, like, do you think they're going to level out? Do you think they're going to go up? What should we anticipate? All of the above.
Yes.
I know everybody hates when you ask that question.
Well, you ask the question, are they going to go up or are they going to go down?
Yeah,
yes.
Both.
They're going to do both. And that's what they've been doing.
Yep.
They're, from what I understand, we're in the 3s. Great.
Yeah.
I mean,
it's great.
Great. Some of the loans you can get in the 2s, like VAs, you can get in the 2s, and there's different ways to get in the 2s. But okay, 3s are still amazing.
Yeah, they really are. And I think people lose sight of that when for a hot minute, we were seeing everything in the
twos.
twos. So now that they see threes, they're like, oh my gosh. And I know everybody says this, but my mom's like, we bought our first house at 9% interest rate.
Yeah,
and
or 14%.
yeah. I'm like, yeah, when you put it, you take a step back and look at it, it's like 2 or 3%. That is just so great.
Is. And you know what? It's really confusing, I think, too, to the consumer, because when you're seeing ads everywhere, $199.
Yeah.
Are you out of your mind? Yeah, you are. Because they don't tell you that you have to pay for, like nothing.
Yeah. You have to buy down that rate.
You have to buy it. It has to make sense.
Yeah. No, and that makes sense because as a consumer, I don't do mortgages. And so you get something in the mail and you're like, what? My mortgage rate could be this and my payment can only be
Go
this.
back to your lender. The loan officer that helped you, just if you liked them, go back to them and ask them.
We had to do it through our builder. And so, I feel like he was in a whole different state than us. So it was kind of one of those things that, no, I wouldn't go back to.
No. Okay.
But, it's funny because we got something in the mail and it said that. And then it says your mortgage payment could be this much. And I was like, what? How? And then you read the fine details and it's like your taxes and insurance are not included in this payment. I'm like, well, yeah, that's why my mortgage payment
You have to
would
read
be
that
so
fine
low.
print.
Yes. And you have to
Very,
pay
very fine.
$5,000 for this rate as well.
I still get phone calls all the time. Are you ready to get out of your FHA loan? I'm all, I've been out of the FHA loan for 5 years. You might want to update your system because that is not. And then I'm currently refinancing my house. And so I think it was my servicing. No, it wasn't my servicing company because I'm with Golden One right now, but another company called because my credit was ran.
Oh,
and so they called me and they're like, so we see that you're about to refinance. I bet you we can beat those rates. I'm all, I bet you cannot.
You're like,
thank you very
I'm
much.
a loan officer, but good try.
I'm a loan officer. And he's like, oh, okay, thanks.
Have a good day. Yeah,
Yeah.
I mean, you always get those. I remember when we did that when we purchased our house, like we got so many phone calls. And it's like, it was hard because with the builder, they offered this huge incentive that I was like, well, I mean, I don't think anybody can really touch this, So
be careful with those.
Okay, let's talk about those.
There's fees. There can be fees, and there's other things that the builder, yes, offers incentives. And I'm hoping one day, love you builders, but I'm hoping one day that
goes away.
Yeah, because
sometimes unfair.
Yeah, because you're using their title company, you're using their home insurance, you're using their mortgage, you're using all of theirs.
Right. Like so they're making so much money off of one purchase. Really,
I don't know. I have a client right now that she went and looked at a particular builder, and they came back and were like, yeah, the home insurance $25. I'm all, your house is going to probably be about $550.
Yeah.
How are you getting 25? Oh, we have to go through their home insurance. I'm all,
I didn't even know they had that. I mean, to be that deep.
I'll tell you the name later.
Oh no, here we go. Yeah, let's keep it clean on the podcast.
I'm not telling you now.
So now with Geneva, you've been there has it been over a year?
March
will be a year.
Yes.
Wait,
so
March was a year.
I decided to switch. I was with Cherry Creek Mortgage. Loved the company.
Yes,
loved everybody I worked with.
There.
There was just some final changes that happened, and there were some issues with my personal life, and so it took me a little bit to change, but I had to find another company that was very similar to Cherry Creek that looks at us as clients and then our clients as clients.
Yeah,
and
that's huge.
They're what do you call it? I can't even think of the word. Like their
marketing.
It's to be a good human.
Oh, yes.
What do you call that?
I don't know.
I don't know either. Anyways, it's to be a good human, and that's how they run their company. That's how the owner runs Geneva. And then my current branch location is in Napa, which is not bad at all because I get to go down to Napa every once in a while.
Wine taste a little bit.
Well, COVID.
Oh yeah,
but
true.
I still live in Roseville, so when I switched companies, that was our idea. Is I was going to have a new branch here in Roseville, but then COVID hit, so that makes no sense.
Right? Why have a branch if everything's closed?
Yeah, so we're working on getting an office space so that we can have, I have a couple loan officers in mind.
Yay. So exciting.
Yes, it's a really good company for sure.
Yeah, and I know when you made that move, it was really hard because you loved Cherry Creek so much, and I know you
9 years.
Yeah.
At one company, that's, I think, unreal for loan officers.
Oh, no, yeah, you don't hear about that very often.
Like, look us up. You can look us up on NMLS. Look up where we've been. You can look up.
You don't jump around.
No, you can look up NMLS, and you can look up all of my employers.
Yeah.
from the time that I was a swim coach.
Oh my gosh, I didn't know that.
Yeah, we have to list everything.
Everything, which is probably a good thing. Kind of,
you can see who jumps around.
Yeah. Oh, yes, you can. Yeah, and I know you were just very happy to be with Geneva. I can't believe it's been a year. That's wild. I feel like 2020, we just kind of blinked and it was over.
Gone.
Yeah. So, I mean, I just appreciate you coming on here, telling us a little bit about your stories or anything else you want to share with us. I know, we kind of went through like how you got in the industry. Obviously, you love doing VA loans and helping first-time home buyers and stuff. And I think that's super important to have people like you in our industry that genuinely want to help people. So if people want to get a hold of you, how do they do that?
Always on my Facebook, social media.
Yes, you're great on there.
Yeah.
Do lots of good videos. You have a Facebook business page?
I do.
Okay.
And I have Facebook and
Is it just like Tracy
It's
Ferris?
Tracy Ferris Loan Officer.
Perfect.
So pretty much, even my website is tracyferrisloanofficer.com. I have all the social media, TF Loans, Twitter stuff. I have it all.
Oh wow! I didn't know.
I don't know if I have. I don't. Yeah,
I'm gonna go look that up now.
It's TF Loans. Yeah. That's always a good way. It's just to reach out to me that way.
Yeah, and I can genuinely say, knowing Tracy for as long as I've known her, she's an amazing loan officer. And
thank you.
Yeah, and it's great to see, when you post on social media, a lot of times people will be like, look how many loans I closed, which is awesome, celebrate those wins. But you put out a story of like, wow, I had this person and this happened and boom, they got their offer accepted. So it's cool to see that and see that you're genuinely helping people. So thanks for coming on. It was good chatting with you, and hopefully we'll get to have you back again.
Awesome. Well, thank you so much.
Yes. All right. Well, everybody have a great rest of your day out there. Thank you so much for listening.
Thank you.